Welcome back to another episode of Beyond the Sold Sign Real Estate Unplugged. We are your favorite hosts and realtors, Lauren
and Naya.
And we are so happy that you are back. If this is your first time joining us, welcome. Let's get right into the story of the week.
All right. So a few years ago, I had the opportunity to work with a client who had been on the hunt for her first home for months. She had a limited budget, but was determined to find a place where she could settle down and start a family. After several months of looking at houses in her price range, she came across a charming, albeit neglected, 1950s bungalow. It had good bones, a great location, and a spacious yard. But there was one major catch. It was a fixer-upper. The kitchen was outdated, the bathrooms were barely functional, and there was extensive water damage in the basement. Most buyers would have turned away from such a project, but not this client. The client knew that she didn't have the funds to take on a major renovation like that on her own, but she had heard about the FHA 203K loan program and thought that this might be the perfect fit. The 203K loan is a government-backed mortgage that allows buyers to finance both the purchase price of a home and the cost of renovations into a single loan. It seemed like the ideal solution for this client. The client got in touch with the lender, who was experienced with the 203K process. After an initial consultation and some paperwork, she was approved for the loan. The process involved getting estimates from contractors on what needed to be fixed, and we worked with an FHA approved consultant who helped assess the scope of the repairs and what would qualify under the loan program. As the renovations got underway, the client's vision for her dream home slowly started to come to life. The outdated kitchen was replaced with modern cabinets, countertops, and appliances. The bathrooms were completely gutted and turned into sleek, functional spaces. The basement was once damp and dark, which transformed into a cozy family room. All the major structural issues were addressed, including fixing the water damage, and the client was able to create a home that truly fit her needs. The best part, because the loan allowed her to include the cost of repairs in her mortgage, she didn't need to come up with thousands of extra dollars out of pocket. Instead of buying a fixer-upper she couldn't afford to renovate, the client was able to walk into a fully renovated home that was exactly what she'd always dreamed of. So this story is just one example of how the FHA 203K loan can be a game changer. It allows buyers to invest in properties that might otherwise be overlooked and turn them into something truly special. For home ownership, for buyers who are willing to put in the work and have a vision, it's an amazing way to make your home ownership dreams come true, even if the house needs a little TLC.
I love that.
Yeah.
And I don't work with 203K loans like a lot, but I like that she had the opportunity to do that, because I feel like some people with the interest rates right now, it would be nice for people to have that option, just because some of the homes are expensive and they need some work.
Yeah.
So instead of having to bring all that cash to the table, they can wrap it into a renovation loan.
Yeah, I think it's a good way to be creative right now, like you said, with home prices by themselves that aren't going down, and then, you know, interest rates as well. It is a good way to kind of create, I think, your own deal, or find your own deal, and like be able to finance it at the same time.
Yeah.
And then kind of build equity through that, or, you know, increase the value of your home through that. So I think it's a good idea. And I think it's important to know, like, this is I guess essentially a type of an FHA loan.
Yeah.
You know, it's still government backed, but it just has this extra layer that allows you to get the financing for these kind of renovations all wrapped into your mortgage financing as well. So that would be, so like if someone bought a house for like 100 and I don't know, let me not even say 100, for like $215,000, right? Let's just say like in Baltimore or something, we buying a house for $215 and need some work, right? Let's say we're in Hampton or something and needed some work. This buyer, like a buyer, could go in and get a FHA loan and
wrap the cost of renovations into that. So now, like, let's say their house is $300,000 because they are wrapping the renovation.
Yeah.
So their mortgage will be based on $300,000, not
Right.
$215,000.
Right. And the only thing there's like a standard 203K loan that is essentially for like larger renovations with projects that will cost more than like $35,000. So yeah, it could go up to like $300,000. And then there's the limited 203K loan, which is for smaller projects, and so then that limit is $35,000. So yeah, but I mean,
so it's capped. Okay.
Yeah, so I guess it's two ways or two options of the loan.
Yeah.
A standard one, so for larger or more renovations, and then a limited one if you don't need that much cost in renovations, maybe for some more cosmetic things. But I feel like if you're gonna do it, don't do the limited. Like if all you needed was cosmetic stuff, you might as well just like make it work on a house where you can really use the funds and really renovate. But,
true. That's true. Because if you're in an area, do you feel like the area would matter? Like, don't put in too much work if you know you won't get the return back. Like, if you put in like $100,000 knowing that, right?
Wait, no, not that. Okay.
Knowing that the houses are not, you're not gonna get the return back.
Still don't
do
that much.
Yeah.
I almost think people shouldn't do that like anywhere. Unless you
like
really
that much.
need to. Yeah.
Unless you like flipping it or something.
Yeah, unless you're flipping it. Not a house that you're
like living in.
Please. I mean let's just talk about it first. Yeah.
You must have really bought a fixer upper. The area would just really have to match.
Yeah. So like, for this client, it was a good location and the house had good bones. Yeah. But I think like, having a good location is important.
Can you resell it?
Right.
Are the schools good around you? Because that makes a huge difference. It's like, okay, I put all this money into it.
Yeah.
And then in 8 years, you're like, man, I can't even sell it for what the money I put into it. You don't have any return on your investment. So
yeah,
that's why I was wondering with that
100,000. Whew.
I know. It seems like a lot.
That does seem like a lot. But at the same time, by the time you add a few bathrooms and a kitchen. I mean, and she had water damage, so I wonder what the cost was. That would have been
it'll definitely have to like add up.
Good to know, but it can add up.
Well, I don't know. What would be your max that you would like put into a house?
Like of my own renovation cost, or doing the 203K loan?
All right, let's go 203K. Like, would you just do the limited and be like, okay, like 35 is enough?
I feel like
what?
Yeah, no. I think I would want to probably go over 35 because again, if I'm doing all this, then I might as well just go ahead and renovate. Not everything, but I might as well really renovate
what I want. Yeah.
Versus just like doing like smaller cosmetic things.
Yeah.
But doing $100,000 worth of work, I feel like maybe I need to just be looking at a different house.
That's
so
true.
like maybe
that's true.
50K.
50. Okay. Yeah, I feel like that's a good number. Because water, you got water damage.
Water damage.
If that's
probably.
like foundation or anything like that, messed up some things. But that can definitely go into the cost. But yeah, that makes sense. I would do like 50. I would probably do 50.
Like 50. I think is okay.
Yeah.
If it's more than that, then like
you can be looking for a different
maybe
house.
We just look a little bit more.
Could be looking for something that's like 300,000 that has,
at
like,
that
what
point,
you want.
exactly.
Like if you can afford it at that point, look for something. That is true. Yeah.
So let's not do too much.
Yeah.
But I think for this client, it sounds like she was like really into that.
Right.
And really into like the opportunity to be creative like that.
Yeah. So do you have to have do you have to be eligible, or can like anybody just go in and do it?
So you still have to be eligible, pretty much like the same qualifications for getting approved for an FHA loan.
Oh, okay.
So like generally an FHA loan, you can get approved at a credit score of 580, although we encourage higher so that you can still have a more attractive interest rate.
Yep.
You still would have your typical FHA down payment of 3.5%. And you can still, just how with an FHA loan, you can do a multifamily property. You can do that with this. Now that would be that would be good. That's so good. You're getting a multifamily and you're renovating it.
And it's all wrapped in.
So, and it's all wrapped in. You're getting a renter right away because it's going to be nice. And you're living on your side. That's nice.
And all you putting down is 3.5%?
And all you're putting down is 3.5%.
That is, yep.
Sometimes I wake up in the middle of the night and just like, I should have bought a duplex.
Should have did this.
I still, yeah.
You never know. Maybe you could turn it into it. You don't know. Right? You don't know. You don't know.
I don't know. You're right. But yeah, so I think when people are doing these kinds of loans, common types of repairs that you probably would want to use this loan for would be like roof, flooring, kitchen, bathroom, the major important things. Yep. Again, I would really be looking at major important things, not so much just for a cosmetic fix.
Yeah.
I think it's worth using this loan if there are some major things, but you have a good foundation of a home and a location, and like structural repairs. Right. Yeah. So, yeah.
And can I just go to like a regular lender? We have great 203K lenders. I haven't gotten like a lot of buyers who ask to use it, but the two lenders that we work with do it, and they do it quite a bit. So I'm just wondering, like, I guess you just go straight to them for the process, or is there like a snippet that you can tell us like how the process works really quick, I guess?
So you definitely would want to work with a lender who has experience, and our lenders do have experience with these loans. And as was mentioned in here, there was a mention about like having an FHA approved consultant to help assess the scope of the repairs. But really you want to be working with an FHA approved contractor who knows about this, using this loan financing, and about the approved renovations or repairs with this loan.
A lot of people don't know that.
And so, and the process, because there's a way that the contractors like get paid while the renovations are happening for the work. So you want to be working with a lender who can really be detailed about this financing process, and the contractor on that side for the renovations and repairs who's also aware of this process, because it's not you paying them out of your pocket today on your credit card. It's a little different.
That's helpful.
Yeah.
I didn't know that. I don't think some other people would know that either.
We would really be building a specialized team.
Yeah.
We're always building a team for our buyers of like the best professionals and vendors and sellers.
Yep.
But for this, using this type of loan and getting this type of work done, we're making sure that, we've got some specialty, professional hands in it to make the process smooth, because it's a little different than, just the traditional financing.
Yeah.
Yeah.
Okay. I love that.
Yeah.
Right. So to wrap up, pretty much like the benefits of a 2 or 3K loan would be like low down payment, right? It's 3.5%. It's pretty much you're financing all of your renovations, which is great. You don't have to come to the table with more money out of pocket that a lot of first time or a lot of buyers just don't have. Flexible repairs, the loan can be used for that. You can cap it at $35,000, or you can go over that if needed for any type of repairs, and then it's rehab without all the hassle. So I think that's a great way to do a loan. And if you need any type of assistance, you know how to reach out to us and our lenders. So keep watching. We have all of our information right after the video. We want to thank you guys again for coming back. Again, if this is your first time, thank you so much for joining us. You can watch us on YouTube. We have all of our clips on TikTok and Instagram, and you can watch us on our website and listen to us on any podcast platform. Thank you guys, and we will see you next week.